the Property Pod. Welcome to the Property Pod with Moneyweb. The property sector is an ever-changing sector. And in this podcast series, your host, Suren Naidu, chats to movers and shakers in the property industry.
Hi there and welcome to the Property Pod, South Africa's premier weekly property investor podcast. On this Moneyweb show, we gain insider insights from leading CEOs, analysts, developers and entrepreneurs in the country's dynamic real estate sector. Now, at the end of October, Sanlam Investments made a major announcement regarding the launch of a new property impact fund, which aims to empower South Africa's so-called missing middle. Now, we did report on it, but for more insights behind the initiative, we have Komokelo Liu, the portfolio manager at Sanlam Investments, on the podcast. It's quite a unique fund that has ambitions to make an impact on social infrastructure in South Africa. So it will be an interesting discussion, and particularly social infrastructure in peri-urban and rural areas. Komokelo, welcome to the Property Pod.
Thank you very much for having me, Suren. It's a pleasure.
Now, you did give me insights when I was at the launch, but just to kick it off for our listeners who might not have read that story, why has Sanlam Investments launched this fund and how long has it been in the works, one could argue?
Sure. So Sanlam have launched the Sanlam Property Impact Fund to address a very dire need in South Africa. And this need is to serve an underserved community, which we've identified to be the missing middle. The missing middle represents a large and growing demographic that is often overlooked by both public and private sectors. So we are hoping to provide affordable housing to this sector, as well as educational facilities, healthcare facilities, student housing, and rural township retail centers. This sector represents a 3 trillion rand opportunity set, and it's currently growing annually at around 3 to 4%.
Okay, now you mentioned missing middle. Just for some clarity, who is the missing middle? What sort of income group are we looking at? Because I've heard this particularly from a housing perspective where they might not get RDP houses, as it were, but they also find it particularly difficult to get banking financing for homes.
Sure, absolutely. In terms of the missing middle, Suren, we're talking about South Africans who earn between 3,500 to 36,000 Rand per month. And these are our ordinary teachers, nurses, police officers, municipal workers, and entry-level professionals. And sometimes they don't qualify for affordable interest rates when it comes to private market finance. And they also slightly fall outside the bracket for social housing, which is provided by the government. And social housing, grants, as well as reconstruction and development programs. Perhaps to just elaborate on the missing middle, they roughly contribute about 60% of our tax base as well. So these are, members of the communities which have great potential in terms of their affordability. It's just that they're not catered for in terms of housing products as well as other property facilities as well.
Now, that's probably the middle income market, as it were. It could also be the part of the population that's hardest hit when it's a tough economy. But we'll leave those comments aside. From a fund perspective, where do things stand currently in terms of size? And I know in your press release you talked about 4 billion Rand, but that is not what the fund size is currently. That's the ideal target, but it could be more.
Yeah, so ideally we are targeting to manage assets roughly that give us the 4 billion, but as things stand, we are currently seeded by Sanlam Capital in the form of 2 seed assets, which are 2 rural retail centers, which I'm happy to just share context on at a later stage. And then we also have a cash component. So roughly Sanlam have seeded the fund with about 1.4 billion Rand.
Okay. So it's quite a big base there. What is Sanlam's investment role? Will it remain managed, as it were, by Sanlam, or is it something that we could consider a potential listing on the JSE one day, for example?
I think for now it will remain managed by Sanlam, considering our investment approach. And maybe just to shed some light on our investment approach is
Sure.
that we very much see ourselves as a catalytic equity fund where we adopt a partnership approach with property developers and operators as well. So we partner up with established service providers who share similar financial and impact goals so that we ensure alignment between commercial objectives and long-term societal impact. And as I've mentioned, we are equity providers with a minimum contribution of 51% in the form of cash equity in property investments. So we are purely investors in property, and our counterparties or joint venture partners, they normally provide the operational skills to manage the properties that we invest in. And essentially our co-investors or counterparties, their equity contribution normally starts off at a minimum of 25%. And that can come in the form of either cash or the actual property asset itself, or even they can gear against their shareholding. So we've adopted an operating model which we call the IOOT, which is an invest, own, operate, and transfer model. And essentially what we do with this model is that we hope that the long-term beneficiaries of the assets and the properties we invest in do become those of our co-investors or joint venture partners in this model. So as equity providers, we look to remain in the property asset for around a tenure of 5 to 7 years, depending on the nature of the asset, and then ultimately hope to enable our joint venture partner to become 100% shareholders once they are financially stable. And with regards to the latter part of your question, do we envisage ourselves joining the JSE listed space? So currently, that's not in the works or in discussion, because what we tend to find is that we would require an investable pipeline in excess of around 12 billion to 15 billion rand in this market should we wish to be on the JSE listed space. And that comes with its drawbacks, i.e., loss of strategic flexibility in the future, also market volatility, given that the property impact space is untried and tested at large in South Africa. And then there are other disadvantaging factors at the moment which would prohibit us from joining the JSE, such as the dilution of control of Sanlam's shares, as well as pressure for short-term performance, because we see property impact fund for long-term holdings and long-term prospects.
We'll get to the impact fund side of things in a sec, but in terms of the actual investments that you've made already, can you share some insights into that?
Absolutely, Suren. So currently, as I mentioned, we are seeded by Sanlam Capital in the form of 2 assets, and these assets are rural retail centers, one of them being Jane First. So Jane First Plaza is actually located in Limpopo's Sekhukhune district, and it's a modern retail hub serving township and rural communities. And it plays a dual role as a commercial anchor, as well as providing social infrastructure which supports both the national retailers and local entrepreneurs. From a social point of view, Jane First contributes roughly to about 102 employers that are directly linked to the center itself. And that makes up about 85 to 90% of the staff being of the local community. And then the other seed asset, which is also similar to Jane First that we've invested in, that's Kwagga Mall. Kwagga Mall is located in Kwaggafontein, Mpumalanga. And we currently see that it services roughly around 45,000 people on the regular every month. And the mall offers an enclosed footprint of around 34,000 square meters, which caters affordable retail spaces for national brands such as ShopRite, Pick n Pay, as well as local Black-owned SMME brands as well. And the greater community of informal traders are also catered for in terms of formalized structures to allow their entrepreneurship and business to flourish as well.
Okay. Kamokela, just some insight there. We've had, rural and township retail is very popular at the moment. So you have listed funds already playing in that space, including private developers. When can we expect some sort of investment into the other areas that you talked about, possibly housing, student accommodation, and healthcare?
Sure, Suren. So that's currently afoot in terms of we are executing on our existing pipeline, which sits at around 9 billion rand worth of investable opportunities, of which it does include sectors such as healthcare, school facilities, as well as student housing and affordable housing. So we are targeting a phased approach in terms of deployment of our current capital. And that deployment is also quite closely linked to the capital that we're aiming to raise for the fund, which is currently sitting at around 2.4 billion that we hope to raise for the fund through external contributions as well, such as our pension fund allocators, endowment funds, fund of funds, which we're hoping that they can partner with us during this journey as we seek investable opportunities. But so currently healthcare and educational facilities are top priority, and hopefully by Q1 next year, we would have closed out on assets in either of those spaces.
Now, you've mentioned it, so I have to ask, you talked about pension. Can you give us a short spiel on what sort of returns we're looking at? Because it is an alternative investment class, you could argue, and you're trying to punt it as an impact fund.
Sure. Yeah, so returns are quite a priority as well. I know sometimes when we mention returns and impact funds, it might come across as a secondary thought or an afterthought. But from our fund's perspective, we are mandated to at least achieving gross targeted returns of CPI plus 9% over a rolling 3-year period. And that roughly translates to returns of about 14 to 15% internal rate of return. However, we do aspire for more, depending on different subsectors that we play in. And I'll give you an example. For instance, in affordable housing, we target returns roughly of around 18 to 20%. Similarly with healthcare as well, we target returns north of the 16%, 17% mark. So we try to shoot the lights out when it comes to returns. But at the end of the day, we as a fund are mandated to achieving returns roughly around 15%.
What is the interest? How are you punting this fund to pension funds to actually put their money in to this alternative investment opportunity?
Sure. So because this is an underserved but growing market, it allows for pension fund allocators to be first, to gain the first mover advantage, so to speak. And one unique selling point of a property impact fund such as ours is that it's pretty much resilient and offers diversified income streams. And those income streams come in the form of tenants from the missing middle, and they tend to be a bit more reliable than the lower income groups, as well as being more consistent than high income groups, especially during economic downturns. So considering the nature of our assets, they tend to be quite sticky, especially healthcare, educational and retail spaces. They're quite sticky when it comes to rental and services of income. And then other factors to also consider for pension fund allocators in investing in our fund is that our fund is pretty much aligned to sustainable development goals as well as ESG mandates. And maybe further to expand as well, we also aligned with the framework of the National Development Plan. But perhaps to touch on the SDGs, Sustainable Development Goals that we're looking to address through our fund is it's good health and well-being, which is SDG 3, and then we're also looking at SDG 4, which speaks to quality education. And then the last 3 SDGs that we look at is decent work and economic growth. followed by reduced inequalities. And lastly, we're looking at the SDG 11, which speaks to sustainable cities and communities. And I think, this is a value creation that most pension funds like to align themselves with, and couple this with risk-adjusted returns that we are offering through a diversified portfolio of sub-property assets. This is an interesting proposition which most pension fund allocators seem to favor.
The reason I ask, it's not a question here, but I know during the briefing we talked about the fact that around 2-3% is invested in social infrastructure. So there's a huge opportunity there without too much comments around Regulation 24, I think it is. But Kamokelo, Sanlam Investments calls it an impact fund. I know you came from an alternative investment space. Why impact fund? Is it a case of really making an impact? And you talked about the targeted sectors, but do you want to share more insight on the kind of impact you want to have, particularly on those rural communities? I know you mentioned jobs in some of your initial investments.
Yes, I'd love to expand a bit on it. So as a fund, we are looking to address some of the social challenges, and there are plenty of gaps in the industry that we've identified, and one of them being overcrowding in schools, school children having to commute long distances to getting to schools. And then similarly as well, hospitals being out of reach for the missing middle and underserved. And then further to expand on this narrative of the gaps that are available in the market is that there's a 3.7 million unit housing backlog which needs to be addressed. And this slightly equates to around 300,000 to 500,000 houses having to be developed per year for the next 10 years, so essentially a decade. And this is just only to catch up to the backlog. So as a fund, we've identified some of these gaps and challenges, and most of these challenges come in the form of poor maintenance and infrastructure readiness in peri-urban and rural areas, as well as the high costs associated with developing in peri-urban and rural areas. And lastly, there's also limited capital access for most developers to actually operate in these areas. So as a fund, that's where the need stems, and we're looking to assisting alleviate this need, because we are fully aware that the government can't do this all by themselves. So we're looking to actually provide provision to capital as well as invest in these opportunities so that we can address some of the social challenges faced by communities. And in a nutshell, essentially that's why we endeavor as a property impact fund.
So it's quite a strong ESG side of things there. Kamokelo, just to conclude, how long have you been involved with the fund, and what's your background before we let you go?
Sure, Suren. So I've actually been involved with the fund for a period of about 5 months, and the fund itself has been around at least in the making for the past 18 months. And from my background, I'm actually a professional quantity surveyor who's worked in various sectors of the property space. I used to be a construction quantity surveyor. Then I moved over to being a consulting quantity surveyor for around 3 years. And that was followed by a stint in property finance for roughly around 4 years. And my last job per se before I joined Sanlam was also in the asset management space for a property impact fund. And that was roughly 3.5 years in that space. So overall, I've been in the industry for around 11 years and counting, and I'm looking forward to this exciting journey with Sanlam as we have launched the Sanlam Property Impact Fund.
Kamokelo, we'll have to leave it there. Thanks so much for your time. We will get an update for you perhaps in the new year. That was Kamokelo Liu, the portfolio manager at Sanlam Investments, talking to us about Sanlam's new Property Impact Fund.
Thanks for listening to the Moneyweb Property Pod with Suren Naidu. To listen to more episodes, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates. Follow Suren on Twitter at Suren Naidu for more of his property industry content and other business stories.